What's going on, everyone? In this video, we're going to be doing the weekly recap of the stocked up trading floor. The market had a pretty wild week over this past week as tariff fears and uncertainty is rising quite a bit. And we are certainly heading into an insane week as the so-called Liberation Day on April 2nd, with all of these tariffs, is finally set to go into effect. So there's definitely a lot of craziness happening right now in the market, but let's get right to this week's recap. Starting out with the high-risk scalp recap, we could see on the 24th, it was a pretty good day. Mara, AMD, and Tesla were in the top three as Mara had call options that popped up by 436%, AMD calls with 195%, and Tesla calls with 160% pops. As we scroll throughout the list, we can see that there was definitely a good amount of action all day on Monday. A fair amount of stocks moved up a decent amount, and then you could say like Meta, Citigroup, and Rivian didn't really pop up that much, which would just be considered duds or counter trend opportunities. As we scroll throughout the week, we can see that on the 25th, there weren't as many plays as the market was a little bit slower. Walmart, Netflix, and MU, you guess you could say, led the way, but it was really only like Walmart that had most of the good movement, and it was to the downside. The rest were pretty choppy and more so duds than anything else. As we scroll throughout the week, we could see on the 26th, there was a lot better action and just movement in general, especially with NVIDIA, AMD, and AVGO to the downside, and honestly, a handful of other tech-related names. There was a lot of good action on the 26th, and definitely was a momentum-driven day. Thursday was definitely the day of the week as Surge actually had its best move ever, and we saw some GME put options rise by 1,300%. So that was insane. APP put options also rose by 913%, and even Tesla, Rivian, Baba, and other stocks had some pretty strong movement. So Thursday was definitely the day of the week, and it was phenomenal to see that GME movement. And then on Friday, it wasn't as crazy as Thursday, but there was still some respectable movement nonetheless. MSTR and Amazon and even Meta certainly had some good moves. And of course, there were like a handful of stocks that also had, more than respectable moves like Wolf, BAC, JP Morgan, Mara Hood, and so on. And of course, and as always, there were a handful of stocks that didn't really move up that much or just offered counter trend opportunities. But overall, lots of exciting stuff is happening on the shorter term scalp front. As always, it's important to have multiple strategies working for you at once. Looking at this week's Theta recap, 3 out of the 4 plays expired for max profit. With short put option trades like these ones, it is crucial to make sure that the stock you are selling put options on is a stock that you are more than happy to hold. And the put that you're selling has to be a price at which you are happy to hold that stock at. When you do that, this strategy is much more advantageous. Selling put options has multiple things working for you at once. Options in general are theoretically a little bit more expensive than they should be. So when you sell them, that works to your benefit. But also when you sell put options on a stock that you're happy to otherwise own, you essentially put yourself in a position where you get paid to potentially buy a stock at a price that you'd be happy to buy it at. And assuming, again, that you're happy with owning that stock for the long term, that proposition by itself is very advantageous. But when you combine that with the added optionality with, adjusting these options as you see fit, like rolling these options before you'd hypothetically be assigned shares, or even getting assigned shares and then selling covered call options, or, deploying any number of, secondary strategies on top of it, offer a lot of benefits. And markets like this one will certainly increase the quality of these opportunities as implied volatility continues to rise and as stocks sell off, because the opportunity to acquire these stocks will be much lower in the sense of the price you'd have to pay to get them. And then the insurance, you can say, or the put options that are being sold will rise in value because implied volatility naturally increases during craziness and especially trade wars. So if you don't sell put options already, definitely consider looking into it. As always, if you need any help, feel free to reach out to Tom, Hunter, Mason, or myself in SM Chat, and we'll make sure you're taken care of. But besides that, thank you all so much for watching, and have a great rest of your weekend.